The global energy demand has been continuing to rise for at least the last 60 years. More if we further extend the graph out towards the left. Driven by emerging economies and developing countries, global energy usage is expected to grow 1.5-fold by 2050. In spite of alarms about climate change, and coal, oil and natural gas still remain the predominant sources of energy worldwide. With rising global temperatures, increasing pollution, and the realization that our fossil fuel reserves are finite, many countries are already looking to shift towards green energy sources. Many are looking to make this move even faster as a result of the energy insecurity generated by the presently ongoing Russian war on Ukraine. According to Bloomberg NEF's annual Energy Transition Investment Trends Report 2022, $920 billion was invested in energy transition deployment and climate tech companies in 2021. Where energy transition investment refers to the money spent to deploy low-carbon energy technologies, and the investment in climate tech companies will be used to scale the operations and develop the technologies of these companies in the years to follow. From 2010 to 2019, China was the single largest investor in renewable energy, and spent $758 billion on non-hydroelectric renewables, compared with $356 billion from the United States and $202 billion from Japan. However, to completely eliminate net carbon emissions by the middle of the century, transitional energy investment will need to cross $2 trillion from 2022 and 2025 and $4 trillion from 2026 to 2030, while an average of $1.5 trillion in annual investment will be needed by solar and wind plants between 2026 and 2030. All of this makes green energy a great market opportunity for investors. The terms green energy and renewable energy are often thrown around interchangeably, but they are not the same thing. Most green energy sources are renewable, but not all renewable energy sources are green. In other words, green energy is a subset of renewable energy. Renewable energy, in contrast with fossil fuels, is in infinite supply, and therefore green energy is sustainable and does not produce greenhouse gases or harm the environment. Hydropower, for example, while renewable, is usually not considered green given the industrialization and deforestation involved in constructing hydro dams. In addition to the energy sources themselves, green energy also often refers to auxiliary technologies, such as smart grids and batteries for electric vehicles that are needed to turn the green energy dream into a reality. You might wonder what the best form of green or renewable energy is, but there is no one answer to this question, since renewable energy output is heavily dependent on climate and geography. Electrical output from wind and solar has improved drastically over the years and made them cheaper than fossil fuels in many locations, while hydroelectric, geothermal and nuclear power are more reliable at scale but come with environmental drawbacks. As is true for any industry, you can invest in green and renewable energy either by investing directly into businesses that make up the industry, or by investing into mutual funds or index funds that constitute several green energy securities. I'll cover more green energy investments and companies in greater detail in future, but here's our two funds that you can investigate further if you're looking to invest in green energy. Based on the Wilder Hill Clean Energy Index, this fund invests at least 90% of its assets in common stocks that comprise the index. This ETF aims to track the returns of an index made up of clean energy equities from around the world. If you made it this far, thanks for your time. If you have any investing topics that you'd like for me to cover, please drop them in the comments below. Don't forget to follow me and subscribe so you're in the know when my next post comes out.